Hey everyone, Couch Investor back to another video for today. So let's talk about Shopify. The stock is still down around 70 to 73% from its all-time highs. Of course, from its all-time highs, that price right there didn't really make sense. Hindsight is 2020. Fine, let's move on. But what if I told you that e-commerce still has a long way to go? I'm sure most people, if you ask them how big of a percentage do you think e-commerce is with regards to the overall retail sales, I think the majority will say, oh, for sure over 50%, for sure more than that. While actually it's in the low 20%. Yes, it is growing right now. Of course, every business that exists today will have a website. Every shop will have a website on the internet as well. You can have a real store, but most likely you will have a website as well that sell the same products. So that growth might accelerate in the years to come. But right now, low 20%. And Shopify's penetration in e-commerce market in the United States is just around 10%. So for Shopify specifically, there's also a long way to go. Now let's not forget there are lots of competitors out there: Wix, BigCommerce, WooCommerce, Amazon, Alibaba, so on and so forth. But with Shopify specifically, I want to talk about the issue. Currently, I don't own any shares anymore, but I have built my own merch store on Shopify's platform. It launched last week. If you want to check it out, link will be down in the description below. You don't have to buy anything, but would be greatly appreciated if you just go and check it out. Share your thoughts down in the comments if you want to see some improvements. I'm always learning more and more things about Shopify, the business, but also how me as now a user can improve the website. And I'll tell you what, there's so much optionality, it's actually insane. Now, going back to my issue. So the problem I want to discuss in this video is great company, but the price just doesn't sit well with me. Now, I'm not talking about the stock price, as you can see here. Yes, it's up close to 100% since the lows back in October. Right now, we're just over the, what is it here? The green one, the 50-day moving average. Then pre-market, we might be going over the 20 and the 200-day moving average. And then, of course, we will have at the beginning of May earnings report. Now, if you remember, last quarter was an okay quarter. Of course, the company takes a hit because of the Deliver acquisition. Now, expect margin to take a hit for a while. Don't expect margin expansion. At least I don't expect margin expansion in the near term because of the Deliver acquisition. Now, when it comes to the state of the company right now, $63 billion in market cap, revenue has gone up. I believe on a 3-year CAGR growth there is close to 50% or so. So all good. Of course, a big push from the pandemic. Free cash flow has now gone on the negative side. We know why. So in the last 12 months, $186 million. Return on equity also pretty negative, 35%. Gross profit margin has come down as well, just under 50%. Then, of course, this right now, price earnings to growth ratio in the next 12 months doesn't really make that much sense to look at it, but it was at 4. Price to sales ratio, and this is an issue with a company like Shopify in a high interest rate environment, like many others, by the way. Price to sales ratio in the next 12 months, 9.5 times. So not cheap at all. But on the flip side, it is a great company. So let's discuss it further. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. I would really appreciate that. We're on our way to 25,000 subscribers. Let's try and end this year with 30,000 subscribers. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So first of all, a couple of things that they mentioned during last earnings call. So Shopify's penetration of the US e-commerce market is currently 10%, with this year's GMV surpassing $197 billion, as GMV has grown more than 3 times since 2019. Of course, coming out of the pandemic, don't expect that growth to continue the way it did. Then with regards to some announcements, so they say here, in Q1, they already welcomed the iconic streetwear Supreme to Shopify. Also in Q1, Mars, one of the largest CPG companies on the planet with over a century of history, signed a global agreement with Shopify. Now, of course, companies like Heinz, Nestle, Gymshark, Netflix, Allbirds, and many other big companies have already built their websites thanks to Shopify. And in my opinion, this will only continue. I think they will attract more and more big companies to come and build on Shopify. That way, they will rely maybe in the future a bit less. Of course, they will rely a lot of it, but a bit less on entrepreneurs, which have high risk, right? Because in a difficult environment, maybe entrepreneurs don't really like to take that much risk, or they take the risk, but then they fail pretty fast. So having those big companies built on Shopify as well is maybe a sort of insurance. Now, as for the outlook, they say here on revenue, we historically have experienced a sequential seasonal decline from Q4 to Q1 due to the strong holiday selling season. Makes sense. We anticipate a similar trend this year and expect Q1 revenue growth in the high teens on a year-over-year basis. They expect Q1 gross margin to be slightly higher than our gross margin for Q4 of 2022. Let's see what happens there. And then they say here, overall, the same factors that impacted gross margin in 2022 are expected to continue in Q1, including the annualized impact of the Deliverr acquisition and the continued growth of Shopify payments. Now, we also have some new analyst coverage. So Shopify initiated with an outperform at birth. So they have an outperform rating and a $55 price target. The analyst launched coverage of companies across internet and digital services, saying each category has unique positive rent risks in the current environment. It sees a variety of drivers supporting Shopify's revenue growth and margin expansion. Then we have another one here at Needham. So hold rating but no price target. The analyst sees downside risk to Shopify's more consumer-dependent merchant solution revenue and thinks the street isn't adequately encompassing margin pressure from its fulfillment network ramp. Given worsening discretionary demand, the firm is wary of the company's entrepreneur exposure, a bit of what we've just discussed. So again, me personally, the problem now with Shopify is that it is an exceptional company, incredible management, great future ahead, but is $45 the price you want to pay? Is 9.5 times sales the price you want to pay today for a company like this currently? Of course, if we can go back, then we are all in on Shopify back in October when the price was $26. For sure, for those that bought the price there, no problem. But right now, that's my issue with Shopify. I know it's going to be a great company, but right now, seeing how many other companies out there are maybe fairly valued compared to Shopify, I have an issue buying these shares. I'm not saying it's not a buy, I'm not saying it's a short or whatnot. That's just my opinion right now. That's just my problem. But again, the reason why I'm so confident that Shopify will be a successful company is, for example, the example right here. So this is Ben Francis, the founder of Gymshark. So apparently he founded that company in his parents' garage while working as a pizza delivery guy. He's now one of the world's youngest billionaire. And yes, of course, he started his business on Shopify. Of course, we have Allbirds as well, started on Shopify, went public last year, probably some other companies as well. But this again shows why Shopify is such a great business, such a great partner, such a great platform to work with and grow with. And that's probably one of the main reasons why it will be and is super successful. And of course, the rate of innovation, the rate of improvement on the platform is one of the fastest out there. There are many companies that innovate and improve over time, but I don't think there's a company, especially not maybe in the e-commerce industry, that moves and innovates as fast as Shopify. For example, we have here the integration, well, this is still behind closed doors, but the integration with ChatGPT. We already touched on this a little bit with Expedia, Instacart, etc. in another video. If you want to check that out, it's going to be in the top right corner. But with Shopify, this is basically what will happen. So you put the plugin in Shopify and then you basically ask it what you're looking for. You ask the question, then great idea, asking a couple of questions to refine that search. You say exactly what you want, the price, no size particular. Okay, and then you got it. He then will suggest, or it will suggest, a couple of products. You can click on it. No problem. You go on the website, buy with ShopPay, extremely fast, and you're done. Of course, we already talked about shop.ai. You can try it out yourself. We showed it off in another video as well. Go on shop.ai, You can already talk to a bot. It's not ChatGPT, it's another version, but same thing there. You say exactly what you're looking for. It will search every store on shop, give you what you want, select, boom, you got it, you buy. Of course, this is great for sellers, but also very, very good for buyers. But again, going back to the point, this company sees a new technology on the rise, adapts extremely fast. In the future, new technologies, new way of selling, buying, marketing, you name it, maybe VR, AR. I'm pretty sure that Shopify will be one of the first to adopt these type of technologies. So I'll end by saying this. Great company, exceptional company. The problem right now is that it's not fairly valued, in my opinion, especially not in the current macroeconomic environment. High interest rates, of course, we talked about this. Actually, we're going to get the CPI report pretty soon. Inflation is still high, although it is coming down. It will take some time until interest rates come down as well. Until then, it will probably hurt companies like Shopify. But hey, do share your thoughts down in the comments below. What do you think about Shopify, the current price? Have you been buying, selling, holding? Let me know down in the comments below. Make sure to check out the Shopify merch store. Would really appreciate that. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.